welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Pranay Dureja. He's derivatives and QIS Index Researcher at Nasdaq Global Indexes, as well as Paul Schroeder, Director of Factor and QQQ Equity Product Strategy at Invesco. We're here to discuss how investors can build innovation into their portfolio for all different types of financial objectives. It's great to have the both of you back with us as always. Pranay, let's discuss 2025 performance of the Nasdaq 100, another double-digit year with the two handle.
Absolutely. And with double-digit, we actually came up on 21% at the end of the year. And with that number, there's two threes to keep in mind of. The first three is that we outperformed the S&P 500 by 3%. And the second three is that this marks the third year in a row where we have outperformed the S&P 500. And the reason for that is because there has been this recurring theme that has continued to drive the economy forward in the past 3 years, and that's been artificial intelligence. What's happened over these past 3 years or so is that we've been in this cycle of anticipation, but then also implementation on top of that, where you started with the anticipation of generative AI, followed by the implementation of generative AI alongside of the anticipation of agentic AI. The phase we're in now is that there's been a lot of companies implementing agentic AI while we're seeing a lot of anticipation for things such as physical AI and other forward kind of features of that. And over time, these cycles are going to get longer, especially with things like agentic AI. There's a lot of use cases that are going to kind of make their way down into things such as regulated industries, such as financial services and healthcare. And there's still a lot of value left to be seen that'll continue to exist going forward. So kind of what that's allowed for is a continuation of record earnings that has been in the face of rocky elements that have occurred throughout 2025, such as DeepSeek, as well as the Liberation Day tariffs. And so what that's led to is a continued resilience of the Nasdaq 100.
Yeah, it certainly has. And Paul, in addition to the tech performance in the Nasdaq 100, we are seeing the constituents broaden out as well.
We definitely are seeing the constituents broaden out. I think if we take a look at how investors voted with their dollars last year, we saw QQQM, which also tracks the Nasdaq 100, along with QQQ, bring in over 20 billion in net new flow, on top of the 21% performance. So assets grew tremendously within QQQM, very impressive. But as you alluded to, Jill, we saw a broadening out of performance where we saw names outside of the Mag 7 creep into the top 10 performers by absolute performance for 2025. I think if you also look down cap market spectrum, we also have QQQJ, which tracks the Nasdaq Next Gen 100 index, which is more of a mid-cap growth fund. We saw that perform very well, up 20%. But I think what's most interesting is that we saw QQQS, which also tracks a small cap Nasdaq index based on patent value. We saw that outperform the Nasdaq 100, up nearly 23%, over 23% for the year. So I think a lot of the questioning that we saw towards the back end of the year around where the AI trade is in its cycle, et cetera, we saw a broadening out. And I also think we see these newer, smaller companies that have been performing well as well, investors moving into them.
Yeah, so it sounds to me, Pranay, that there is continuous growth of the Nasdaq 100 ecosystem.
Yep, absolutely. And so there has been this growth. I think the important thing to note is with all these things that have been coming out regarding where the areas of growth have been, it's important to understand in the context of which this is happening, which is this new resilient form of innovation that has continued to exist and continues to constantly recover from any kind of rocky elements that do happen in the market, as I was referring to earlier. And so what that means for the growth of the ecosystem is that the product ecosystem related to the Nasdaq 100 is going to reflect the constituents that are inside the Nasdaq Stock Exchange, which is, after all, where the performance is coming from. And so if the companies in the Nasdaq Stock Exchange continue to become more resilient, the products are going to reflect that in going from a place where the older ecosystem was more about just strictly getting high growth to a place now where we're getting a mix of high growth, income, and downside protection. And we're seeing that being reflected in a variety of products that are being made that are linking to the Nasdaq 100 and are continuing to do so in such a way.
Yeah, the Invesco QQQ Innovation Suite, I mean, there are a number of products that can allow you to find different ways to meet those financial objectives.
There definitely are. We've been fortunate enough to partner with Nasdaq now for over 26 years to provide that innovative exposure through many different products. What we've seen over the past 5 years is that we've been able to put products out there to give clients exposure to other parts of the market outside of the S&P, or excuse me, outside of the Nasdaq 100. So for example, as I mentioned before, QQQJ, which is looking at the next 100 non-financial companies outside of the Nasdaq 100, QQQS, which moves down cap market spectrum, gives you technology along with healthcare exposure. And as Pranay alluded to, we've seen an explosion of active ETFs surrounded within the option income or option space, right? We have QQA, which provides and targets a 10% monthly income, annual income of 10%, but monthly income payments on top of the index's dividend yield to really provide different flavors and different exposures to the Nasdaq 100. Ultimately, we want Invesco to be known as the place to go to purchase the ETF within the Nasdaq ecosystem.
Yeah, so there's so much innovation, Pranay, that's happening within the ETF and index space overall. If you can give us a peek behind the curtain, what can we expect from 2026? What innovative projects is your team working on?
Yeah, absolutely. So, as Paul alluded to, there was a lot of kind of growth in the QQQ innovation kind of suite space. What's happened with that is we're going to be able to piggyback off of a lot of those innovations. So something that we heard throughout 2025, we did a bit of a listening tour throughout kind of the Northeast where we talked to a bunch of retail institutional clients. And we've seen that clients really want to take control of their destiny. And those are the types of products that we're going to see. QQA is a form of that, where you're trying to take tomorrow's innovation, where maybe you don't have the multi-decade investment horizon to fully see that. You take tomorrow's innovation as today's income, which is a way you can kind of see products such as QQA. We've seen further innovations within the income space through things such as auto-callable ETFs. You can expect to see a lot of participation there from Nasdaq. You'll also see other areas through other defined outcome ETFs happening. You'll see areas where we're continuing to kind of broaden out into mid and small caps and find new ways to kind of position how you can get exposure to the Nasdaq Stock Exchange.
Yeah. Let's talk about and wrap up here with the flagship Invesco QQQ ETF. Last time you and I spoke, there was a proxy vote looking to modernize its structure and so forth, and it was approved by shareholders. Tell us more about that. What are the benefits? How does it impact shareholders?
Sure. So December 19th is when the proxy passed, and at the end of the day, what we were trying to do at Invesco was update the structure of QQQ. If you guys remember back in the 90s, basically all ETFs were launched as unit trusts. Mm-hmm. And since then, there's been innovations within the ETF industry as a whole. We wanted to update that to a more modernized 1940 Act open-end ETF structure. And with the proxy passing, we were able to do that, and it afforded Invesco a few different things. First, it allowed us to lower the expense ratio from 20 basis points down to 18 basis points, so a 10% reduction of the overall expense ratio, which is fantastic and puts us more in line with our end clients' goals. It also allows the portfolio managers certain tools to allow them to track the Nasdaq 100 a little bit closer, whether it's reinvesting dividends of the underlying constituents where before that cash had to sit and not be reinvested back into the companies. It also allows the PMs to generate a little bit of extra revenue through sec lending. So overall, we're very happy that the proxy passed. We're very thankful for the shareholders that did pass or vote for the proxy to pass. And we feel that this really modernizes QQQ with where we are in the ETF industry.
All right, appreciate both of your insights. Thanks for joining us on Trade Talks. And thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.